Stocks under pressure amid concern about sky-high valuations. Apple's China woes deepening with a 24% sales plunge.
Bitcoin retreats from its first record high in more than 2 years as investors take the opportunity to book profits.
Plus, Republican voters in 15 U.S. states expected to back Donald Trump over Nikki Haley in the Super Tuesday primaries. All right, let's kick it off this morning with a little bit of breaking data coming out of South Korea because we have those inflation numbers that are dropping at this point in time. At the headline level, you're actually seeing a little bit higher levels than what economists have been predicting here. So consumer prices are up 3.1% on the year. The estimate had been for 3%. Now, higher food prices. You also saw a rise in retail gasoline prices. It was that period of the Lunar New Year holiday. And so that dynamic very much playing into the numbers. Actually, when you strip it out, you take away food, you take away energy, so that core reading, you saw a gain of 2.5% on the year. So that was very much in line with what that estimate was, unchanged as well from the month prior here. So that disinflation trend, it really does appear to be intact at this point in time in Korea. And our Bloomberg economics team as well is saying that the BOK likely to stay on hold until mid-2024. Certainly, that has been a central bank, Heidi. We've been watching quite closely in this region.
Yeah, and it is looking like potentially a pretty soggy start to trading in this part of the world. Belle, as you say, we're watching those sort of CPI numbers, but there is general kind of consensus, or perhaps at least when it comes to Japan, we're getting perhaps a little bit ahead of ourselves. But let's get you straight to the start of trading here in Sydney. That staggered open, a little bit of downside as futures had indicated. We're watching miners in particular, the likes of BHP and Rio in focus. We had a couple of reductions by investment houses to cuts for those two names, so watching how they traded today. The Aussie dollar is holding pretty steady at 65.02. We had a set of larger options rolling off below that 65-cent level, but pretty range bound when it comes to how the US dollar has been trading. And that's also reflected if we take a look at Japanese assets in the yen as well. Dollar yen has been down just about 0.3%, still hovering at around that 150 level after pairing an earlier loss after the ISM data came through. We're also hearing from an ex-BOJ official saying that the BOJ needs 9 years to normalise its balance sheet. So, you know, this is kind of a big picture view as to the challenges for the Bank of Japan, even when they do pull the trigger on policy normalisation. Nikkei futures are looking a little bit to the upside, about 0.1% there. But of course, with the muted session in the US, that record market rally being very much tied to the fortunes of how we see the US trade. Just for an example, the Topix up nearly 15% this year. That correlation is at one of the highest levels with the S&P 500 in history. So US sentiment very much weighing on where we go with Japan at this point. Dollar yen just under that 150 level at this point. Also watching A50 China futures looking like it's going to be a bit challenging. We saw the Golden Dragon index falling for a second day on Tuesday. We're likely to see rising volatility, at least according to the likes of Morgan Stanley. With the budget plan, a lot of concerns, Belle, around how they're going to be able to meet that around 5% target without stronger stimulus efforts.
Yeah, that's right. That base effect, I mean, it does seem to be even around 5%. Very, very ambitious goal that's been set by officials there. But let's actually stick in China because really that theme is playing out in the US tech space as well. These were the big decliners or the big movers that we tracked intraday in the session because you had Apple, for instance, seeing its woes really in mainland China deepening. They've seen a big sales slump there. Tesla is a similar story as well because their shipments really dropped to that country. AMD, this is more about that tech story, that race for supremacy in the chip space between the US and China, but essentially it's hit a US roadblock in selling an AI chip to China as well. So that was sort of the state of play. It was that concern around tech stocks that drove the overall sentiment in the session. If you change on now, take a look at how futures are coming online today because what's really starting to concern investors here is whether or not these tech companies, as you say, Heidi, have they gotten just a little bit too ahead of themselves? They've got very lofty valuations. Can they live up to them as well? US futures looking fairly steady at this point in time. Brent crude as well, or WTI rather, unchanged. But Bitcoin, something else that we're tracking as well because it had earlier topped nearly 70,000, but then dropped quite significantly, nearly 15% at one point in the session. So it is really that boom-bust cycle that we continue to track for that asset. Let's change, though, because it is the biggest day so far in the US election calendar. Merely millions of Americans in 15 states are choosing their preferred presidential candidates in primaries. Let's bring in Bloomberg's political news director, Jody Schneider. And yeah, I mean, look, it's pretty much been a foregone conclusion in a lot of different cases here between Nikki Haley and Donald Trump. Is perhaps this Super Tuesday a little bit less super here, Jody?
Yeah, I think it is a little less super this year because there's not a whole lot of contest. We know Joe Biden is going to take this on the Democratic side, and Donald Trump is expected to, if not win every state on the Republican side, at least win most of them. Nikki Haley has not. She won the District of Columbia last weekend. That's the only contest she's won where she came in first. She's won some delegates, but she's really not a serious threat. So it's going to be, we're going to have to look at other things. So a few numbers, 15 states, as you said. On the Republican side, 874 delegates. That's 36% of the total delegates. With what number Donald Trump already has, if he wins everything tonight, he will come close. He won't clinch the nomination tonight, but he will come very close. So effectively, you have almost your general election matchup set for November, and it's only March. So really, that's why people are sort of bemoaning there's not much contest here. We'll be looking for other things. We'll be looking for the size of the margins. We'll be looking for, with the current president, President Biden, will there be uncommitted voters, a large number of uncommitted voters, like there were in the Michigan primary last week?
Jody, we know that Donald Trump and Joe Biden are expected to really, sweep the contest when it comes to primaries. What else are we watching for, given that this is also the busiest day for congressional primaries?
That's right, and there's some races we're looking for. In this cycle, we could see both the House of Representatives and the Senate flip, as we say. Majority control could go to the other party. In the House, every single member has to run, except those who are retiring. In the Senate, about a third of the Senate is up, and the Democrats have a much tougher map this time to defend than the Republicans do. There's a couple of races that are interesting on both sides. In California, we have the race for the seat that belonged to the late Dianne Feinstein, and we have a former representative running there. Another representative is running against him, another Democrat. This is Adam Schiff and Katie Porter. They have put some money into the Republican race, the Democrats there, hoping that Schiff will run, some of them hoping that Schiff will run against Steve Garvey. But be careful what you wish for there. That could be an interesting race. Steve Garvey's a well-known name. So we'll watch that one carefully. Another one we're watching is in Texas to see who's going to run against Ted Cruz. Colin Aldred is expected to win in the Democratic primary there, and he could be somewhat of a threat to Ted Cruz as Colin Aldred has served in the House of Representatives. We'll also be looking for some trends, what we're seeing in terms of voter turnout, voter enthusiasm, that kind of thing that could give us some clues for the general election.
I think it's not so much a question of whether Nikki Haley wants to stay in the race, but whether really she can afford to. Do we know what she's likely to do after Super Tuesday?
Yeah, and that's the question we're all watching. That's really the question tonight. When does she drop out? Because if she can't win, you have to win at some point. You have to win some primaries and pick up some delegates. And after tonight, if Donald Trump has enough to almost become the nominee, you really have to wonder what her path is and why she's staying in the race. So that's really a question. She said she'll stay in through Super Tuesday. She said she'll stay in as long as there's a good reason for her to stay in. But the question is, why and how much longer can she afford to do this? Some of her donors have already started donating, for instance, to House and Senate races instead of to her campaign. So she's done pretty well in fundraising, even after she didn't do as well as her supporters wanted to see her do in New Hampshire, and after she did badly in her home state of South Carolina. But the question is, how much longer can that continue? So I don't know if it's a matter of hours or a matter of days, but we're really going to be watching to see what she does after what's expected to be a big loss tonight for her.
Bloomberg's political news director Jody Schneider there in DC. Our special coverage of Super Tuesday with Joe Matthew and Kaylee Lyons begins at 10 a.m. if you're watching in Hong Kong, 1 p.m. here in Sydney. But first, here where Motley Fool Asset Management says financial markets are holding up well near all-time highs and investors are maintaining cautious optimism. That's coming up next. This is Bloomberg.
AES is the largest seller of renewable energy to corporations in the world. We've been the innovator in bringing new technologies to the sector, such as lithium-ion batteries for grid stability. AES invented the 24/7 hourly match renewable product, but this ensures that the energy they're actually consuming is renewable. We need a partner like Wells Fargo that's creative and willing to work with us to find new ways to satisfy our needs.
The world needs ways to reduce carbon emissions,
especially for heavy industry. We're working on solutions in our own operations,
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
Everyone's talking about AI. But how can it help your business? Can it make chatbots act like your very own personal assistant? Yes. Put AI to work with ServiceNow.
Assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
It's a huge week in politics. Today, it's Super Tuesday, and former President Trump is looking to cement his place as the Republican nominee. Then, Thursday, as the border, the economy, and the November elections dominate the headlines, President Biden will deliver his State of the Union address. Balance of Power's Joe Matthew, Kaylee Lyons, and Bloomberg's top political analysts will bring you live global coverage of both events, starting at 9 p.m. Eastern. Bloomberg. Context changes everything.
Wasn't a great day when it comes to leadership for the Asian session as trading gets underway in this part of the world. This is what we saw, particularly when it comes to that slide in tech stocks, right? There was a lot of caution in the run-up to Fed Chair Jay Powell's testimony to Congress. But of course, we are seeing what wasn't quite the worst day of the year as it was setting up to be, but pretty close. NASDAQ 100 daily performance there in that chart there. Really, a lot of these tech stocks losing traction after these concerns about sky-high valuations, some of that caution starting to pass through. But interestingly, though, we've seen that sell-off kind of lack a bit of conviction in a lot of ways. We've seen long-term investors staying at bay, which potentially, some of the bulls would say, could potentially slow that descent that we see in equities. We saw mostly kind of fast money, if you will, selling off equity futures, certainly in that session. We saw some of those big names like Apple weighing more broadly across the tech space. But let's bring in Shelby McFadden, who's the investment analyst at Motley Fool Asset Management. Is this a good point for investors to consider that perhaps they need, broader exposure to their equity portfolio than just mega caps, and certainly than just tech mega caps?
Yes, absolutely. And I mean, when we think about it holistically, you'd ideally want to have that exposure anyway. But definitely now at this time where we're seeing those specific types of names being a lot more sensitive. We say that they have a, higher duration, right? They're very sensitive to any movements in the interest rates. And if that's your entire portfolio, you're really at a risk when we're talking about, the market being really keen on focusing on economic data and, essentially being out of control of the cost of borrowing, which is going to heavily affect the valuation of those companies. So definitely want to see more diversification in general, but now would certainly be a time, if you haven't yet pursued it, to make sure that you're diversified out of just those big market tech leaders.
I'm curious to get your view when it comes to the state of the consumer, because you say the worst is kind of over for the US consumer. Walmart, though, is one of your top stock picks.
Mm-hmm. Yes, and part of that is because when we think about Walmart, there's a few different reasons. So on the operational side, they have incredible operational leverage where they're really able to push and pull on their workforce in a way that a lot of retailers are not necessarily able to do. On the other end, where the way that they deliver to the consumer is in high value. So while they do sometimes take a sort of a hit on gross margin, as most of their peers will also do, depending on, just where consumer appetites are, they are usually able to pull that operational string that allows them to deliver on value. And third, they're also able to start capturing some of the higher income consumer that didn't originally have a propensity to order from Walmart or walk into a Walmart. And so they're able to deliver across the spectrum, increasingly so, which, gives them a little bit of an edge. Now, the valuation, we see it as a little bit rich. But at the end of the day, there is almost sort of an annuity type of retention level with Walmart. And we have seen that grow with a little bit of the macro uncertainty.
How do you diversify beyond exposure to the tech and the big names, right? What are you looking for in terms of opportunities within the small cap space?
Yeah, so when we think about small caps, but also, across the spectrum, we're really looking at companies that are going to suit our pillars of quality. So that's going to be the management culture and incentives, the economics of the business, their competitive advantages, and their trajectory. So where's the business going? And when we focus in on those things, and some of those things will be like free cash flow, what are their potentials for margin expansion? Are they gobbling up market share? That's when you're able to diversify, because you're no longer sort of stuck in a corner by industry or by sector, and you're really just looking for those qualities. So we're often able to find that in small cap, because often they're operating in these fragmented spaces, and occasionally you find that diamond in the rough that is going to become a mid cap and maybe could become a large cap in that 15-20 year investment horizon. So we sort of find those opportunities by focusing less on the industry, less on the sector, and more on the quality of the business.
Playing devil's advocate here perhaps a little bit, but a lot of analysts would say that the tech stocks, yes, from a valuations, from an earnings trends, from a market sentiment perspective, these valuations or these levels are actually justified. So is that something that you would agree or disagree with?
I would say across the entire spectrum, if we sort of lump them in as a whole, I'm not sure that I can agree that they're completely justified. Part of that is because, there's not a sort of standardized valuation or modeling adjustment that we have in the industry for impact of AI. And it has become clear that certain companies have a much more of a benefit priced in than others. And there's really not a way to measure, whether they're warranted. Another is, terminal rates and discount rates, how we're all actually modeling, and whether or not it's a little bit too optimistic and maybe not fully grounded in the way that we might see interest rates going. So there are different views on that. So I would say on the whole, I don't know that that it's fairly valued as a whole sector, but there are probably a couple of companies that are closer than their peers to justifying their valuation.
And which ones would those be?
I'd have to say it's tricky, because when we think about, let's say, Apple, that gets punished pretty often, part of it is because it leans so much on hardwares. And even though it is still a bit more rich, we see that they, face a lot more volatility. On the other side of that, when we think about, let's say, NVIDIA, they, should be on the hook a bit more, we would think so, with the richness of the valuation, but also seem to fly a bit higher for gains that we may have viewed as not as significant maybe 18 to 24 months ago. So just kind of like, sort of juxtaposing those two, seeing that they sort of fly in the same circle, but are treated much differently when it comes to reactionary effects on valuation.
All right, Shelby McFadden there, investment analyst at Motley Fool Asset Management. And you can get a roundup of the stories that you need to get your day going in today's edition of Daybreak. Terminal subscribers go to DayBgo. You can also customize your settings so you only get news on the industries and the assets that you care about. This is Bloomberg.
AES is the largest seller of renewable energy to corporations in the world. We've been the innovator in bringing new technologies to the sector, such as lithium-ion batteries for grid stability. AES invented the 24/7 hourly match renewable product, but this ensures that the energy they're actually consuming is renewable. We need a partner like Wells Fargo that's creative and willing to work with us to find new ways to satisfy our needs.
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Everyone's talking about AI. But how can it help your business? Can it make chatbots act like your very own personal assistant? Yes. Put AI to work with ServiceNow.
Paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
The trading has been, by all terms, historic.
We've gotten to very frothy levels.
I do still think, despite, the suggestions that there could be a bear case, it's difficult to really hone in on that bear case when the facts, I think, are so blaringly obvious in favor of a bullish case.
Net new buyers drive more adoption and market cycles. And I think the question to ask is, who are the net new buyers in this cycle? And the net new buyers is the global financial system.
What we're seeing is these green shoots of demand are emerging, a lot of retail coming in, the trades are on the smaller side, and I think we're really yet to see what this untapped demand will look like once these ETFs are offered on more platforms.
I wouldn't be surprised to see some correction and some consolidation, but I'm very loath to pick a Bitcoin high because I really do believe this is price discovery.
It's competing against the S&P index. It's competing against real estate, $100 trillion plus asset class as a store of value. So we believe capital is going to keep flowing from those asset classes into Bitcoin because Bitcoin is technically superior to those asset classes.
There were some of our guests on the outlook for Bitcoin, which notched a fresh record high for the first time in more than 2 years. A bit of a pullback, though, from those levels. But let's get more on where Bitcoin is headed and bring in our crypto and DeFi reporter, Muya Shen in New York. And Muya, perhaps it's a little bit of profit-taking since we had that record.
What we saw today was like a combination of sell the news and the leverage event. With Bitcoin hitting all-time high, one of the traders I talked to say, it means that almost all Bitcoin buyers were in profit. So it makes sense some of them will choose to take the profit. And immediately after those sell, a massive liquidation event also took place. And that's sort of evidenced by the record high open interest in the Bitcoin perpetual swap market, as well as extremely high funding rate. So like some of the bullish traders were paying like 100% on annualized basis to bearish traders to keep their positions open. As a result, I think today with Bitcoin alone, we saw like $800 million worth of liquidation happened in the past 24 hours.
How are we seeing futures affecting these prices?
So previously, in the futures market, right now it's a little bit different, but in the past, when you are on crypto exchanges, you can put leverage up to 100 times to like sort of betting on the Bitcoin prices to go up or go down. And as we are sort of approaching the new all-time high today, we're seeing the open interest on the Bitcoin market going up to a record high, meaning that there are more traders are betting higher prices on Bitcoin. And when that prices sort of dropped earlier today, and it caused massive liquidation, therefore we're seeing like an even bigger drop today.
We've seen so many different Bitcoin rallies and then pullbacks over the past few years, but is this run-up any different to what we've had in previous cycles, do you think?
It's funny because I was watching the clips that the TV show earlier of all the investors talking about how Bitcoin is going to be an institutionalized asset this time. I think, again, just like everyone said, because the Bitcoin ETFs flows have been strong and there's no evidence that it's going to go lower, meaning that we'll perhaps see more demand coming from the Bitcoin ETFs. So with that, with those positive flows, it could mean that this time we'll see Bitcoin go even higher. One of the traders I talked to saying, in the past, when Bitcoin reaches a new all-time high, you see the prices like went like 4 or 5 times even higher. And right now we just sort of like reached out to the all-time high from the last bull market. So it's possible that we're seeing it, double price of the current all-time high.
What do you think, Muya, about the Bitcoin halving event? Because that's set to take place in April, around the 3rd week, perhaps. Typically, it's been something that's been a bullish factor for prices, but some are saying actually we could see a pull down to the early 40K mark.
Yeah, I think it's always sort of like a debate whether the Bitcoin halving is pricing or not. And I think this time is slightly different just because Bitcoin reached a new all-time high before the halving event. Correct me if I'm wrong, but I think in the past, the all-time high always got hit after Bitcoin halving event. So I think it will be very interesting to know whether halving events will be a bullish event for Bitcoin.
Our crypto and DeFi reporter Muya Shen there. Lots more to come here on Daybreak Australia. This is Bloomberg.
AES is the largest seller of renewable energy to corporations in the world. We've been the innovator in bringing new technologies to the sector, such as lithium-ion batteries for grid stability. AES invented the 24/7 hourly match renewable product, but this ensures that the energy they're actually consuming is renewable. We need a partner like Wells Fargo that's creative and willing to work with us to find new ways to satisfy our needs.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
If we run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business. right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? Are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Well, we are due to get Australia's fourth quarter GDP numbers in the next hour. Bloomberg Economics thinks that the economy expanded 0.2% quarter on quarter. Further growth set to remain subdued. Our economics reporter, Swati Pandey, joins us now for more. So what do we see as being the biggest drags on the economy?
The biggest drag is actually consumption. So we are seeing consumers have really cut back. Retail sales have been very weak in the past, in the 3 months that we are talking about, the last 3 months of 2023. And business investment also was weak in that period. So it's kind of the impact of the 13 interest rate hikes that the RBA delivered over 2022 and 2023. We kind of like are seeing that impact feeling in the economy.
Which is interesting, of course, in the last 3 months of the year, expect to see a huge amount of spending right going into the holidays. But does this impact the RBA decision?
Look, the RBA has been sounding quite hawkish, even though they have left interest rates unchanged in December and in February, but they kept their hawkish stance. The question for March, for later this month, is whether they drop that hawkish stance and kind of like start preparing the market for no more rate hikes, but we are not starting cuts yet, but no more rate hikes, which they are not ruling out as of now. So if today's data is weak, they might say that, okay, we don't need any more interest rate hikes in the economy. But if the data is strong, because we had strong export impulse in yesterday's report, so if the data is strong, driven by exports, then they might want to keep that hawkish stance.
If the data is weak and potentially even negative, what's the recession risk?
So there is a possibility, like 0.2% is pretty close to zero or negative, and that is that risk that some economists are talking about. On our survey, the lowest forecast is 0%. I think what it might mean is that the RBA raised, when it raised in November, it was raising in an economy that was already in recession. So it points to a policy error on their part. But if you look on a per capita basis, we are already in recession. So the population is growing at 0.6%. On a per capita basis, we will have negative quarter-on-quarter growth for the fourth consecutive quarter, and that just goes to show that people are hurting, and the economy is slowing down, and that's the impact of the rate hikes.
We'll get those fourth quarter GDP numbers out later today. Bloomberg Economics reporter Swati Pandey there. And Belle, subdued number expected, subdued trading so far when it comes to what we're seeing across Australian equities.
Yeah, that's right. That's really that setup we've got going on here. Take a look at the ASX 200. We're just half an hour into the session here, and it's pretty much flat, which is actually better numbers than what we had in the Wall Street session overnight, because there's that story of weakness that came through. There were really 3 stocks in particular that we were tracking. There was Apple, there was Tesla, and there was AMD. And what those 3 stocks had in common was the China story as well, because Apple, Tesla seeing declining numbers there for their sales. You've also got AMD that's been blocked from selling technology. So that's really still a sales story, I guess. But the general gist of this is that there's concerns around tech stocks Are those valuations looking a little bit too toppy? Tech stocks are a little bit weaker so far in the session, but this is the broader outlook here. You mentioned earlier that very high correlation we've got between the US and Japan right now, and Nikkei futures just coming online in Singapore here, and you've got that drop there of around 0.8%. US futures fairly flat. The Chinese story, of course, playing into it as well. We had that NPC yesterday kicking off, and Morgan Stanley already out with their reaction to it because they're saying that there's more volatility to expect ahead for Chinese equities. The fiscal support measures that have been announced so far at the MPC are insufficient, they say, to boost the economy. We're discussing, of course, that 5% GDP target, quite ambitious when you put the base effects into it. But let's get more now from our markets reporter, Yesh, joining us. And what's really driving that perspective from Morgan Stanley here?
Yes, and thanks for having me. Yes, a lot of the Morgan Stanley is not alone. A lot of economists on Wall Street basically think that 5% of GDP target is very ambitious because on average over the last 2 years, the average expansion in China was only 4.1%. And if China is to announce like large stimulus, this goal can be achieved. But so far, what's been announced so far is quite limited. According to Morgan Stanley's estimate, the broad measure of fiscal stimulus only amounts to 11.9% of GDP, only a marginal improvement from 11.8% from last year. So their concern is that the government is not doing enough to get China out of the deflation that kind of a loop. So they're quite worried that investors on a broad basis may be disappointed, and therefore we are going to see more volatility in the equity market.
The work report seemed to be the government doubling down on its current strategy, and in a lot of ways we're getting less access to information, right? The MPC is shorter, the press conference has been scrapped, even his, the delivery of the work report, his speech was quite short. Does this worry investors that, on the information and data side, it's becoming more opaque?
Yes, absolutely. That's why we're seeing over the last couple of years, a lot of the historical norm has been basically abandoned. For example, the change of constitution, the remove of the youth unemployment, for example, all these things adding up just create a lot of policy uncertainty in China. That's why we see the FDIs, the foreign direct investment, have been declining in China, and also a lot of the outflows from the equity market over the last couple of years. And the other point to make is that the current strategy China is pursuing is doing very little to, again, get China out of the deflation loop, because China prioritizes all these industry policies, pouring all these resources to the industry that they deemed as strategic amid the geopolitical tension with the U.S. The EV sector, the battery sector, the renewable energy, all these stuff. That's just adding a lot of production and supply to the market. While they did very little, at least so far, they have done very little to stimulate the demand side of the business. That's why we see this sort of a supply and a demand mismatch that caused the deflation problem in China.
And around 5% runs a risk of being a policy mistake, right? They want to instill confidence, but if they don't back it up with policy stimulus to be able to reach that target, how effective is the national team in this instance?
Yeah, the national team, we're talking about the state-backed funds buying equities market and try to put a floor on the market. That certainly helped from a tactical standpoint. But the fundamental issue is the earnings of the Chinese companies is not improving. And the earnings is directly linked to the nominal GDP growth. For example, the 5% of GDP, real GDP target China just announced, the implicit, there's also nominal GDP target. You can back out from the government's deficit plan. That's come around 7.4%. That implies the government's target for GDP deflators, the broad measure inflation, is 2.4%. That's quite ambitious because a lot of the consensus is expecting very flat inflation number. To achieve 2% inflation target, it needs a lot of the efforts to get China out of there. so far we have seen very limited stimulus on that front.
A markets reporter, yes, yeah, there. And you can follow more on this story and all the day's trading in our Markets Live blog. That's on the Bloomberg at MLIV Go. You can get a market rundown in one click, and there's commentary and analysis from our team of expert editors. You can find out exactly what's affecting your investments right now. This is Bloomberg.
AES is the largest seller of renewable energy to corporations in the world. We've been an innovator in bringing new technologies to the sector, such as lithium-ion batteries for grid stability. AES invented the 24/7 hourly match renewable product, but this ensures that the energy they're actually consuming is renewable. We need a partner like Wells Fargo that's creative and willing to work with us to find new ways to satisfy our needs.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
China's National People's Congress has given a pledge to increase spending on science and technology research by 10% this year, or more than $51 billion. It reaffirms the national leadership's goal of becoming self-reliant in chip making and AI in the struggle against US tech supremacy. Our next guest actually says China's chip making sector is doing better than expected. Olivia Blanchard is Research Director for Semiconductors, EVs and Auto at the Futurum Group. And Olivia, we were just discussing there in the ad break here that we used to talk about China's chip-making ambitions in something that was perhaps even a multi-decade run here to try and catch up. That gap has really just narrowed so significantly at this point in time to just perhaps even a matter of years.
Yeah, good morning, and thanks for having me. Yeah, you know, China isn't the economy that used to copy the United States anymore. China is a very sophisticated economy. They're a very digital economy, and they are trying to catch up. And if you may recall, a few years ago, there were a lot of stories published about how China was ahead of the United States in terms of AI, and I think that the U.S. government has been exercising a policy to try to reverse that a little bit, and it's been successful.
I don't want to say legit, but it's sort of one of the ones where it's more likely that it might be.
When you take a look rather at the way that China is crafting these chips, because you say that copycat approach that they've employed in the past, is that the same sort of approach that they're trying right now for chips, to try and copy the likes of NVIDIA, for instance, or is it about sort of trying to create entirely new chips instead?
I think it's both. And what we're seeing is there's a lot of sophistication and sort of maturing, even in the AI chip market, which is fairly new compared to other silicon. And they're multi-uses. There's a lot of custom silicon that can go into different use cases and applications, depending on what types of applications you're trying to create. And so China is still playing catch up in a lot of these areas. But I think most of China's problem, on the one hand, is on the design side. It's very difficult to design and develop these chips. But also there's a production side issue. The ability to create these chips, it's a very sophisticated, very complicated process that requires very precise machines. It's very hard to build them or to get your hands on them. And then there is a scale issue as well. It's really hard to build those chips at scale. And the United States right now has a huge advantage, is way ahead of China, and so they're going to be playing catch up for a few years.
And yet we saw really the US government taken by surprise in terms of the progress that Huawei had made, right, which is a company, as recently as 2020 was struggling for survival. Is this as much of a big deal as we would think it is, or is there a very big difference between being able to make one of these chips to being able to produce them at scale?
Right. Well, yeah. So scale is definitely an issue, and Huawei is going to be struggling with that. And although Huawei has sort of, rebounded, it wasn't quite as dead as some claimed it was. It's still pretty far behind compared to NVIDIA and even AMD. So it's going to take a few years for them to catch up still. I think what's important here is that Huawei is not necessarily a threat, or the threat that some people might claim it is. It's going to be really hard for them to catch up. And export controls also are having a huge impact on Chinese access to these new AI chips, especially the high-end stuff.
We did see, though, instances or evidence perhaps of Huawei stockpiling US technology, so that does give it some bandwidth perhaps as well.
Yeah, so I think the main goal of the U.S. government's policy against trying to ship, especially high-end and sophisticated AI technology to China, is on the one hand to deprive the Chinese military of a high volume of chips. I don't think we can expect that China is completely not getting any U.S. chips, any NVIDIA GPUs or even AMD stuff. So they're getting some. It's just depriving them of the volume. And also trying to create a sort of insurmountable gap between the advancement and the pace of development of AI chips in the United States versus the pace of AI chips in China. And so I think the goal, and so far it's been mostly successful, is to keep China to essentially being 3 to 5, maybe 6 years behind the U.S. in terms of development, and also pushing back, right, or putting the brakes essentially on China's ability to produce these chips at scale. Yep.
Deeply frustrating, of course, for the likes of AMD and NVIDIA, although largely that, denial for AMD was not surprising. I do wonder, though, how much of this depends on who the end customer is? Do you have sort of any guesses or insight into how different that licensing could be depending on who it's going to?
I don't think there's a huge difference, or I don't think it really matters in terms of the Chinese market, unfortunately. So there's some good news and some bad news there. The good news for NVIDIA and AMD and at some point Intel as well is that the demand for these extremely high performance AI chips is still really high, right? So NVIDIA's H100 and A100 chips, I think the backlog is still 6 months pretty much. So they're not going to be hurting just because they can't access the Chinese market, no matter how many times they create alternate or lesser versions of those chips for the Chinese market. And it's been kind of a game of whack-a-mole trying to get around export restrictions. So I think that's not going to change. But demand is still there, so it's really good. The good news for the Chinese market, I think, is that because these chips are not particularly available, and I think demand for the lesser version of the chips hasn't been very strong either. Why would China, a very advanced economy, settle for lesser chips? Has spurred quite a bit of investment within China to develop alternatives. And so what we'll see, even though there's a gap of several years, is a lot of startups combining forces with some established makers like Huawei, for instance, and Baidu, creating their own chips. And so I think there's going to be a market for them. China will eventually get to where the United States is now, and they'll be able to serve the needs of their customers within the Chinese market. But bear in mind that this doesn't affect the vast majority of AI chips, right? So PCs and phones, those chips are not affected at all.
Olivia, just quickly, I think that that point there that you're making about these homegrown champions sort of does really underline perhaps that the counter argument against having export restrictions in place, that you just further put that pressure on China to develop its own industry. So are those export restrictions really the right approach here still?
Yeah, I mean, if There's no perfect solution to this, and like I stated earlier, I think that the goal isn't to completely block China from developing these high-end AI chips. It's to push it back as far as possible. And so by putting pressure on China to create its own, I think that's the best way for China to operate here, because trying to source them is still going to be difficult. It's going to be very, very, very hard, especially at scale. So the developing the ability to build these chips at scale is going to take time. There's no stopping it, but I think the policy is working if the goal is to slow China's progress as much as possible. And it could put China behind anywhere between 6 and 10 years. And I think that's the primary objective. And if the United States can maintain that gap, then the United States will continue to maintain a 5 to 10 year advantage over China. And I think that's an acceptable gap for the Commerce Department and for state, and probably for the Department of Defense as well.
Olivia, great to have you with us. Olivia Blanchard, who's the Research Director for Semiconductors, EV and Auto at the Futurum Group. You can catch up on our programming, watch us live, see some of those past interviews in our interactive TV function. That's at TV Go. You can also dive into any of the securities or the Bloomberg functions that we talk about. Join in on the conversation as well by sending us instant messages during our shows. This is for Bloomberg subscribers only. Do check it out. It's at TV Go. This is Bloomberg.
AES is the largest seller of renewable energy to corporations in the world. We've been the innovator in bringing new technologies to the sector, such as lithium-ion batteries for grid stability. AES invented the 24/7 hourly match renewable product, but this ensures that the energy they're actually consuming is renewable. We need a partner like Wells Fargo that's creative and willing to work with us to find new ways to satisfy our needs.
Now that we're getting hybrid cloud right, do we know who's getting AI right?
Well, models and data keep growing.
No rain on the parade, huh, Nancy?
The models say sunshine.